Yes, I do. I do. I absolutely do. So I still think gold will be the best performer. Right now, Bitcoin's leading, obviously, since the start of the year. The S&P, I don't think quite is at this point, since gold's had a pretty remarkable move to the upside. But the bottom line is this, is that you can't get away from the fact that the Fed is now keeping interest rates where they are. They're probably going to tighten a little bit more. But the bottom line is they're not going to be looking to cut until we see a massively nasty recession. So if we get in a little low level recession, which is where I think we're going to go by second half of 2023, and obviously for me with Bitcoin, I'm looking at the long term. I love Bitcoin. I think it's got a huge future, but you still have some stuff that have to be sussed out here in Bitcoin, including regulation, including flushing out a lot of these hands. And again, one of the biggest issues with Bitcoin I have right now is that this run in Bitcoin has almost the same hype to me that Bitcoin had at 65,000.
Gold is set to outperform stocks and cryptocurrencies in 2023 as the Federal Reserve eases on its tightening cycle, according to Gareth Soloway. Before going further in this video, make sure to hit the subscribe button for more updates. Although Bitcoin is up 42% since the start of January, Soloway cautioned that it's a nice bounce, but you're still in an overall downtrend, highlighting the fact that Bitcoin is still down 65% from its all-time high of $68,789.63 in November of 2021 and has continued to trend downwards since then. While the gold market, while off its recent lows, remains below $1,900 and is seeing little reaction to statements from Bank of America that it is preparing for the U.S. government to possibly default on its debt obligations. Many analysts have noted that the growing risk of the U.S. government defaulting on its debt obligations will support gold's safe haven appeal.
You have to get your own discipline under wraps, meaning that the keys are going to be following strict rules. As soon as you kind of go outside of your box of your disciplines, that's where the market ends up eating you alive. So always remember, discipline, personal discipline when it comes to trading is paramount to success. The second thing is understanding human psychology. And this comes in where, many people were buying Bitcoin at 65, 67, $69,000. And obviously that was the wrong time to do it. They were doing it because they saw everyone else doing it. One of my biggest principles is when you see everyone else doing it, you do not do it. In fact, step back, and it might even be a good shortable opportunity if everyone is buying an extended chart that's making new all-time highs continually. And lastly, it's the charts, right? The charts are basically representations of human emotion. Remember, buyers and sellers are the ones that are buying. A chart goes up, selling, the chart goes down. So it's representing millions, if not, multiple millions of people in a market. And therefore, you're reading their psychology. You're reading their greed and their fear. And the charts are like a puzzle. Every piece, every time you get a new piece of that puzzle, it tells you a little bit more to do or what the chart is likely going to do. And always remember, it's all about probabilities. You want to be the casino, not the gambler.
It is already clear the cryptocurrency sector is growing, but nothing testifies to its unstoppable expansion better than the aggressive adoption growth of Bitcoin, which has been profitable for its holders almost 90% of the time since the beginning of its trading. Soloway discussed his past market calls that turned out to be accurate and explained that when he started trading, there was no guidance. He believes that trading courses can be beneficial for traders. Despite a gain of more than 40% so far in 2023 and an increase of over 38% in the past 30 days, Soloway pointed out that Bitcoin is still down more than 65% from its all-time high. Referring to Bitcoin's recent increase, Soloway said it's a nice bounce, but he firmly believes that Bitcoin is still in an overall downtrend.
Not have a lot of volume, then it adds additional risk to your trade. So as a trader, your goal is to minimize every risk possible. And by the way, you're not going to be able to get rid of all risk. Investing is risky, but the point is you don't want to take dumb risk. And when there's very little volume, it means that one seller, let's say I'm buying XYZ, it only trades 100,000 shares a day, and I'm picking up 10, 20,000 shares. What if one seller had a bad day and this person that owned it was like, all right, I'm going to dump my 100,000 shares. That 100,000 would manipulate and drop that price significantly out of my control. So the first thing I look at is volume, making sure it's extremely liquid. No individual should have power to change the chart pattern that I'm looking to trade. Another key principle would be, is there action here? If there's no action, if a stock is trading sideways, and not moving, why am I going to get involved in that? My goal is to be in and out quickly as a day trader, even as a swing trader. I want to find a level. I want to buy that level as the stock is collapsing into it, and then watch for that snapback bounce off of that technical support. So again, as a trader, it's a very different mindset than a long-term investor. Long-term investors are focused on fundamentals. Fundamentals are key. You want to go long, so stock makes money, they pay a dividend. Fantastic. Over 10, 20 years, you'll do fine. For me, I couldn't care about dividends because I'm in and out of stocks so quickly. And same thing with cryptocurrency, where it's just getting in, getting out, making a few $1,000, moving on to the next one, doing a rinse and repeat.
Soloway recalled that he had in his past made every mistake a trader can make and has learned from these experiences. Today, he makes a living from trading in markets. With so much uncertainty and wild swings in the market, it's understandable that investors and traders get emotional when the markets soar to all-time highs or lows. During the extensive conversation, Lin and Soloway offer viewers a look at what you need to unlock your journey to becoming a master trader, including personal discipline, understanding psychology, and chart reading with trading setups. The volume of Bitcoin options traded on Deribit, one of the leading exchanges for crypto-focused derivatives products, jumped 82% in January. More investors are positioning for price gains with the volume skewed to bullish call options, paying a premium for an option to buy Bitcoin.
Thing is, if we go to this chart, notice how we made new highs from the early 2021 high, but there's something called the confirmation signal. This is something I teach in my course, the Winning Trader series. But look at how this high here, all right, notice how you closed above the high and then you reversed. And then you closed above the high here again. It tried to break out again, and you never got a higher close. So the confirmation signal, and I'm just going to give you guys a crash course in this. What basically you need to do, you have to have a close above the key pivot, which was this trend line, which you saw here and here, and then you need a secondary close at a higher high. Pivot, higher high here. Notice how that never happened over here. And to me, that was telling me institutions were dumping into it. If you think about how much irrational exuberance and buying there was from the retail crowd at these highs, this Bitcoin chart should have blown through that level if the institutions were not dumping into it. The long story short, without confirmation, it was not a true breakout. And in fact, it turned out to be a classic M pattern top, right? Double top, M pattern top, which again, in technical analysis, when you learn it, you start to pay very close attention to those type of pattern tops, especially when you have negative divergences. And let me just speak about this real quick. What's the negative divergence? The negative divergence was that in April of 2021, when you were at 65,000, you had hype. When you were at the same level in price, you had basically double or triple the hype. So what I'm saying is the hype was higher, but the price was not matching that. It was a negative divergence in price. And again, you can even look at the RSI and you can see this negative divergence building as well. So these are key things that, again, it doesn't come overnight, but I always tell people 10 minutes a day of learning how to read charts. In 1 year, you will blow your mind at how good you have become. I look back at my younger self and I'm like, dude, what the heck was I thinking back then? Why did I even think I should trade back then before I learned this stuff?
In addition to requiring a lot of research, active trading also takes time. Traders must stay on top of all market news and constantly consider their positions. This makes trading not worthwhile for traders that don't have a lot of capital. The fact is, many crypto traders are just lucky. Traders with the riskiest positions often have the biggest gains in the short run. Everyone is a genius in a bull market, but this success rarely lasts. And yet the surge in volumes also indicates investors are in two minds about the direction of crypto markets. What are your opinion about Bitcoin? If you find this content interesting, give this video a big thumb up and do subscribe to our channel for more updates. See you in the next one.